Now to the economy and a high-flying week for the stock market. The Dow Industrials topped 15,000 on Friday before dipping just below that mark, but still a record close. The market's gain was driven in large part by good news on the jobs front. Unemployment fell 1/10 of a percentage point in April to 7.5% as employers added 165,000 jobs. Joining us with more is Yahoo Finance host Lauren Lyster. Good morning, Lauren. And so is this unadulterated good news, or is there a bit of a mixed bag in this new employment report?
I think it depends really on the perspective you're coming from. If you're coming from a market perspective, this was better than expectations. Everything is measured versus expectations on the street. So the numbers came in at 165,000, as you said, which was much higher than the 145,000 that the street was expecting. So that was good news for the street, for the market. The markets rallied. In addition, it kind of quelled fears that we're heading for some kind of a spring swoon or a sell in May, go away situation, which, hey, it still could happen. But yesterday, that was great news. If you're stepping back, if you're looking at the broader trend, as many economists do, many unemployed people do, there are still some signs that this is a very slow recovery. We're adding around 200,000 jobs as an average so far this year each month. That's progress, but some economists say, hey, this is basically keeping up with the growth in the population. Long-term unemployment remains high, 4.4 million Americans, even though that did come down. The labor force participation rate, which is the number of people that are employed or looking for work, remains at a near 30 or more than a 30-year really low. So there's some concern there about what are these people doing? Are they working in the shadow economy or whatnot?
And we've got this slow, steady growth that we've had now for going on 6 months and more.
Right.
But we've still got looming this whole issue of the sequester and what impact, if any, it's going to have.
Right.
It's come in sort of later than people expected, I thought, but a lot of people think it's still out there, right?
They do. But I felt like going into this report, we were seeing so many analysts say this is the month we're going to start to see the impact. And then really we didn't see that. I mean, 11,000 public sector jobs were lost, but that pales in comparison to, I think, what people are anticipating. What we saw is instead of layoffs, we're seeing many of these cuts expressed in furloughs. So fewer hours for government employees, but these aren't cuts. These aren't going to show up in the unemployment rate. But as you mentioned, I mean, many economists are expecting this to show up later, maybe in the summer months. But I think even in April, if there are cutbacks being felt by businesses or contractors that are concerned about their incomes or that sort of thing, I don't feel that we saw that because we did see hiring in retail and in restaurants. Yep. And those are the first places where you would see cutbacks or a slowdown in hiring if the consumer wasn't spending.
So there may still be an impact out there. I mean, yeah. I guess the long-term question here that people want to know is when are we going to get back to where we were? And the answer to that is still seems pretty far off, right?
Yeah, years, according to an economist we just interviewed from Northeastern University, who did a really interesting study, too, about the long-term unemployed. So this is something we don't often talk as much about the broad trends, but as I mentioned, 4.4 million Americans long-term unemployed. They found that if you sent out resumes, 1,000 of them, people were more likely to get a call back if they had no experience in the field but had a job in the last 6 months than those who were unemployed for longer than that. So it kind of hints at some of the deeper trends there.
Got it. All right. Lauren Lyster from Yahoo Finance, thanks so much for the great information.
Thank you.